So if we're going to go into more details into the trading strategy, I'm basically going to show you, after marking all of those areas with these rectangles, I need to show you what exactly I'm looking for in order to go into a trade. First of all, you need to know that everything that I'm covering in these videos is in the trading manual, and it might be even better for some of you to go over those pages, since there are quite a lot of detailed explanations, and at the same time I'm also giving some examples there, so this might be used as supplementary material to these trading videos, and I highly recommend that you read through the pages of the ebook or the trading manual that I have prepared for you with this free trading course. So what I'm looking for, let's concentrate our attention on this place here. This is basically the 16th, 17th of December 2014, when we have this bearish crossover. I'm just looking for a place that we have a small retracement and then a crossover in the direction of the main trend. As you can see, we have a sequence of lower highs here, as I have marked in an earlier video on the chart, and the price is standing below the 200-day moving average, which is basically meaning that we're in a downtrend. And coming back to this area here in December 2014, you can see that we have a bearish crossover. So the first thing I'm doing after I see a bearish crossover on the daily time frame is I go to the 4 hours time frame. Okay, so let's find the place where we have this bearish crossover. As you can see, this is the 17th of December 2014, and we have this bearish crossover, and what I'm looking for is basically shorting the euro US dollar, and I might use this as a potential entry right here where we have a bearish crossover, but a lot of times I'm looking for just a confirmation and a small retracement and then another bearish crossover in the direction of the main trend. So if I zoom in here, you can see that the first place that this happens is basically right here. We have a bullish crossover, which I'm not considering as a signal to go long, and then we have a bearish crossover, and that's what I'm looking for. This area here is exactly giving me what I'm looking for, and after I have a signal, I'm looking at the high of this session here, and I'm placing my stop like 10 points above the nearest swing high, which is this level here. And my entry is immediately after we have a crossover which is complete, and we have a bar, a candle on the 4 hour time frame which closes, and the moving average is we have a bearish crossover, or the fast moving average closes below the slow moving average. So this is basically my entry. I'm going to mark it with another line so you can see easy where is my entry. It's this level here on the close of this red candle, and what I'm risking from my entry to the stop, my stop is on the level of 1.20 to 25, and my entry is on the level of 1.2167. So it's more or less 60 pips that I'm risking. And you can see after that the price starts dropping, not immediately, but in the next few trading sessions it basically drops down to a level of 1.1800, which is over 400 pips. And on this particular trade I could have, if I stick to the rules, made let's see, I'm risking about 50-60 points, 50-60 pips, and I'm making 400, so I'm making 1-to-8 risk to reward ratio, which is pretty good for this type of system. And after that, when I'm where exactly I'm exiting, as I said, you can see all of those details in the trading menu that I'm offering. But basically, the first place that we have a bullish crossover, or the red line crossing above the blue line, is right here, and that's where I'm going to exit my my short trade. Most of the cases I'm exiting in this level, and some other cases, if for example the daily time frame is not showing me bearish, it's not showing me a bearish signal, I'm not going to exit the trade. So you can see that this is basically this level here where I'm having this signal, and from a daily perspective there is no crossover. The price is tight just below the moving averages, and then it keeps on falling. So maybe the first time that I'm going to consider exiting is around this level on a daily perspective, but yet so we are in a strong downtrend, and then we have another bearish crossover here, as you can see right here. So there is another potential signal which actually has just formed now, and the price is ready for further declines. If we go to the 4 hours, let me just mark it first on the daily. The bearish crossover is right here, and if we go to the 4 hours time frame, and what I'm looking for is basically a crossover on the 4 hours again. So we have one crossover, which is, let me use an eclipse, so we have one crossover here, and I'm talking about the bearish crossover, and then another bearish crossover here. So in both cases, if you went into a short trade, in the first one you should have placed your stop 10 points above the nearest swing high, which is right here, and in the second case you should have placed your stop about 10 points above the nearest swing high, which is approximately right there. And in both of those cases you wouldn't have been stopped out, and you would have probably made over 100 pips so far, while risking probably around 50 to 70 pips. So let's continue in the next video with another example.